Okay.
Good evening. Today is January 13th. Another not terribly exciting session. S&P 500 today is still traded in the same, roughly the same range as the last 3 days. And similar to yesterday, we had a sell-off, except that it was earlier. We had a sell-off overnight, and then the market was bought again around 8 a.m. and was kind of going straight up for a while and ended up in the range. We had a 35 overall points range today and closed about 10 points up, no new highs. NASDAQ tested the 13,000 range and failed to close above, but still was up over 85 points. And bonds were very interesting today. They continued the reversal from yesterday and had a really good day, closing up over 1%. And the Fed person, Clarita, said that they don't see any rate hikes until we get to 2% inflation for a year. And Zero Hedge was joking, given the way they compute inflation, that's never going to happen. So we'll see. And on the politics news today, Trump has been impeached again for the second time, but doesn't look like the Senate is going to do anything about it. Victor, what do you make of it today?
Well, we're very close to an all-time high. We're 10 points away from it. I think the market was incredibly strong today.
Yep.
The all-time high in stocks is 38.23. So we're 15 points.
15 points, yep.
We're 0.2% away from the all-time high. NASDAQ is
150 points roughly away from all-time highs.
Well, I'm looking at the close. There's the highest close is 13,114. So we're about 50 points away from the highest close. Bonds are back. They've gone up 2 points from the lows that were at 166. Now they're 169. It's amazing. There's still 3 or 4 points. A big 3 or 4 points. That's the equivalent of 100 or 200 points in the S&Ps. Why did the bonds go down? At 10 o'clock, they threatened to go down 20 points, almost 1%. That was because the CPI was announced, and you have to hand it to Zero Hedge. They're usually not on top of all the markets, but yeah, the inflation, everything's at an all-time high. The grains, the meats,
Oil, almost.
That's right, oil, all the stock markets. The Nikkei is at 28,400. they're very close. They're less than 2% away from the 30,000 constructor level. So we have a few constructor levels to hurdle. 30,000 in the Nikkei and 13,000 in the NASDAQ and 37.25. I think on Friday we should hit all of those highs. We've actually gone 3 days now without an all-time high in the stock market. That's very, very rare and very bullish. I return to what Victor Hansen announced, suggested a week ago, and which is very obvious to people like us. The woke has been holding their fire. By the way, I'm losing followers, even a tremendous number of followers in my social media account, even though my posts have had more impressions than ever before. So apparently the social media, in addition to banning the big names, they're banning people who showed an interest in that. I implored all my followers never to send me anything that's non-woke, because that leads to a tremendous, even though I have nothing to do with it, that leads to a tremendous reduction in my followers. You might say, why do you care about your followers? I don't know. I don't know why. But what Victor Hansen was saying is that the woke is holding their fire until after the inauguration. And I think that was certainly true beforehand. All the protests stopped, all the violence stopped. But I noticed that the Black Lives group is marching triumphantly through Manhattan, and the exodus from Manhattan to your state continues.
Indeed.
So we have a lot of, and there are a number of straws in the wind. The Lincoln Project has announced that they want to keep tabs on all the appointees, or people who worked in the Trump administration, and eventually they'll be putting pressure on any corporations that these people work with, not to hire them. I noticed that also a lot of the corporations have stopped giving to Republicans. And Jim Cramer, the madman, he said, well, the one thing that could stop social media is what if their stocks go down. And
I don't think so.
well, I once said that, you know, people criticized my book because even though it was a bestseller, they said, he doesn't tell you anything about day trading, you know. I pointed out there that, first of all, if things are ever changing, so if I had a system, it wouldn't be applicable 5 years after I wrote the book, and certainly now it's 25 years after I wrote the book, so anything. But even if I had a system, the people who work with me would be very upset if I gave it away, because their money,
Right.
their bonuses are and profits are dependent upon the privacy and keeping the signals so that they're not widespread. So they would put pressure on me. Then my family would put pressure on me. They you know, you have a lot of grandchildren now. You have to take care of them. What are you doing? Giving you money? So I think for the social media companies, their stock was down. The big one was down from 42 to 37, still hovering around 37. One of the things I've always noticed, and I've found extremely reprehensible, is that the social media companies don't deduct salaries from their earnings. Their salaries are often 50% of a third of their total revenues. They don't deduct it. They have some cockamamie excuse about it's too uncertain and you can't tell when the options are going to be exercised. But that's all malarkey. And you would think that a lot of the people, a lot of the employees in these groups would eventually pressure the boss, cut off your beard and stop hurting us, because a lot of people are dependent upon the options. And so even if the beard doesn't care about if his wealth goes down from 3 billion to 2 billion, the employees will revolt. And I think that's a beautiful part of capitalism, that there are strong incentives in a company to try to maximize its stock price, which is usually coterminous with maximizing its profits. There's a lot of bad news these days, and I thought it might be interesting to review something that certainly Vane, one of the only organs that works for me is my eyesight. I always had fairly good eyesight, and I'm one of the only people that doesn't wear glasses at my age. But I'm looking at some of the things that were negative, starting with 2020. Of course, we had the COVID. Now I'll go down to 2000. The point is, every year, and this is something that Steve Ellison, who's been one of my followers and my colleagues for 30 years, has pointed out. So I'll start with 2019. We've already heard what was wrong with. We know what was wrong with. People were wondering, how did the market go up with all this bad news? But every year there's bad news. And a lot of the bad news, a lot of the years, the bad news at the time was the same. 2019, starting a trade war. '18, emerging market recession. 17, we start the Trump presidency. Brexit.
Oh, yeah.
The Greek debt crisis. 2007, we had the worst market decline ever. Going down, we had jobless recovery. The government credit was downgraded. A debt crisis in Europe, the Greek recession, a global financial crisis, that go back to 2007, 2006, the subprime mortgage crisis. That we had peak oil of $100. Trade deficit was, we had the Gulf War, terrorist attacks, dot-com stocks plunge, Y2K problem, something a little closer to home, going back, long-term credit capital collapses, and Fed had to bail them out. The Asian markets crashed. Greenspan said there was irrational exuberance. Then the previous year, the dollar was at historic lows. Recessions, the budget crisis, the savings and loan scandal, stock market crash. Dollar was too strong, technology, new issues, bubbles burst, record double digit in unemployment. Well, you get the point is there's always something terrible that's happening.
I wonder what will be the theme for this current year. They can't blame Trump anymore, so it will be interesting what narrative the media would come up with.
How about the problems of the incumbent's family, and the prospect of the transition of power with his vice president coming as the woke don't hold their fire, as they begin to demand their due for. I can see a lot of problems that the incumbent will have. I can see a lot of disclosures. about the president's family coming up.
Well, New York City is already stopping business with Trump Organization. With the running of Central Park skating ring and various other things. So lots of places, Trump is certainly going to lose money and more. He's going to have more lawsuits, more IRS.
The banks have already indicated they're going to
a couple of banks.
they're going to stop providing credit to him.
Deutsche Bank and another one, right? So it's interesting. It's really disincentivized people to run for president because who wants that at this point? You have to.
I think the desire for power and the ability to scratch the back of the colleagues will remain, and there'll always be a number of.
Right, but any semi-normal person wouldn't want that. You have to be completely, or at least partly sociopathic to be wanting to do.
I disagree. I think there's a normal desire. More than half the population would like to be president, and they would think if only people would listen to me, I could do so much of a better job. And some people don't have to worry about their own wealth, or they don't have, especially if you've been in politics, you've never had to earn a living where the buyer actually paid money for a product that you're producing. So what do you think the bad news for 2021 will be?
Not the slightest idea. I can't figure out how the media thinks and what particular thing they would find scary and start blowing it up. I was very wrong about COVID. I never thought we would have lockdowns, and yet we did. And there is an article interesting today that until the year 2000, there was not any evidence for any lockdowns at all. Yet we had them. So there is no even point to speculate. They completely make up stuff on the fly, and then they call it science. Like, for example, here's the article, and you could see that not only there was no indication that lockdowns work, they're actually counterproductive. Fauci himself said that shutting down the country doesn't work. World Health Organization said that quarantine is ineffective multiple times. Multiple studies said that quarantine doesn't work. And there is not a single study that shows that it works. They didn't even try to prove that it works. For example, there was a study done by Yale professors saying that it actually can, by Harvard and Yale professors, saying that the lockdowns actually are detrimental for the older population because they reduce immunity among the normal population who is not affected by it. It actually creates more death in the most affected part of the population who's older.
But remember, the one thing it does is it inures the population for government control of their activities, and it makes them very complacent, and that's the main thing that lockdowns occur. It sets a precedent for government control of aggressive control of the economy, and that's very important. And okay, well, again, by the end of the week, we'll gone 5 days without new highs, and when you're all these constructal numbers, there are multiple crossings of the 3,800 level in stocks, and they refuse to stay below. So despite all the bad news, despite the congressional technology complex, we shall see new highs. Thank you very much, Selena.
Thank you.
Have a good day.
Thanks.